Hey, this is Diggy here from ForexHabits.com, and today we're here with an analysis of gold. Now, we haven't looked at gold in a while, so it'll be interesting. I haven't looked at this chart personally for a long time, so we're going to be doing this live as I look at it. Now, the first thing that I can see is it's been in a massive consolidation kind of wedge for the last year. I mean, just look at this. It's in this like very long wedge, and the strange thing is that it's actually gone all the way to the end of the apex almost of this wedge. Normally when price action consolidates in a wedge, it goes to about two-thirds of the way, so about 66%, and then it'll break out either up or down. But now it's just consolidating and going sideways, which makes it difficult to get a read on it. And actually, if you go back in the gold chart, since it's been going up since early 2000, as far as I remember, it's just been doing this repetitively, where it's just been consolidating in wedges and then breaking out to the upside. It's just making wedge after wedge after wedge all the time, like you can see here, for example. More wedges where it just consolidates in these wedges, and then another wedge. And that's just been the trend since early 2000, since the huge gold bull started. Now the question is, since we haven't really seen a big correction over the last years in gold, even though we get these consolidations, we haven't seen a big pullback since it came from the low, I think $300 or $200 per ounce level. You can see that's just on this chart. It's just a massive rally, and we've never had a pullback back to 50% or even to 60% of this entire rally. So the question is that going to happen at some point? Are we going to see downside? Because even in 2008, 2007, 2008, when we had this massive decline in the global stock markets, you can see gold, although it did pull back, it didn't do a massive pullback, and since then we've just had a rally. So the only way we're going to probably get a big decline in gold is if the stock markets sell off big, and if euro US dollar heads down, which means the dollar index would get stronger. Now let's have a look here what's happening on the daily chart. The price action is below all three moving averages: the 21 exponential moving average, the 50 exponential moving average, and the 100 exponential moving average. The MACD histogram is below the zero line in negative territory. The RSI is below the 50 level, which is negative. The stochastics are crossed and pointing to the downside. So all in all, this is looking negative for gold on a daily chart, where unless it breaks above this 100 exponential moving average on the daily, which is 1620, it's looking like it wants to head further down. We can change this to a weekly chart, maybe we get a better picture. Let's have a look. Its price action is below the 21 and the 50 exponential moving average on the weekly chart, but it is still above the 100 exponential moving average. If that breaks to the downside, 1524, then we're going to see a big decline, a big sell-off in gold, I think, of 200 or 300 points. You can see the indicators, the MACD histogram on the weekly chart, it's negative. RSI is below 50 on the weekly, which means negative. The stochastics, they're touching, don't really know what they're doing, they're just below 50. They're kind of touching, looks like they might want to cross to the downside. You can see here what is forming is that the 21 exponential moving average looks like it wants to cross down through the 50. It hasn't quite done so yet, but look what happens when it crosses up. You just get these huge rallies, and actually it hasn't crossed to the downside through the 50 exponential moving average in years, which means that if that does happen, there would probably be a big sell-off. This is a very big support level, also horizontally, and the 100 exponential moving average. This 1520 level, between 1500 and 1520. If that breaks to the downside, then I think you can safely go short, and you can ride this out for a couple of hundred points to the downside. So we're gonna have to wait and see what develops in this little consolidation, because currently it's just just consolidating here between the 1640 level and this 1520 level, which is about a 100-point range. But as long as it doesn't really break to the upside or the downside of this level, of this trading range, then I don't think we're going to see much of a big run either way. And that means that you can try and scalp and try and do a few trades and try and get a couple dollars here, or $10 or $20 if you can get it right, dollar points I'm talking about on the gold chart. But at the moment I would say it's safer to wait for a breakout of that trading range. So if we break down through 1520, 1510, then I think you could go for a short trade. If we start to break up and we get above this 100 exponential moving average on daily, which is about 1620, 1630, 1640, if we break 1640, I think it would be safe to go along. So for now we're just going to check it out and let it find its direction, let it find its feet. It does look like it wants to head lower towards this bottom channel anyway, 1540. So be sure to check out the blog at www.forexhabits.com. Subscribe via email to get these analysis and updates into your email inbox when I do them. And you can profit from my trade analysis and my recommendations that I give you. But always remember, trade at your own risk. Do your own research. If you don't agree with something I say, don't do the trade. And of course, do not trade with money you cannot afford to lose, because forex trading can cause substantial financial loss, and it is not something that everyone can do. Some people cannot handle it emotionally, some people cannot handle it physically. So be sure to trade with money you can afford to lose. Always do your own analysis and always trade with a stop loss. Cheers.